A couple of stories now coming in that we have to track with our colleague Ritu Singh. The first one of them is on the race to acquire steelmaker Monnet Ispat. It seems that race has finally entered its final stages. We're learning that the last date for submission of bids for this asset, that's Monnet Ispat, which is currently under the insolvency proceedings, is set for today. So today is the last day you can bid for those assets. Ritu has more details. Ritu, have a lot of buyers and interested parties queued up?
Surabhi, the last time around when the bid date was extended to the 27th of November, there are about 6 to 7 players that had actually shown an interest. This time around, with the second extension, today is the last day for submission of firm bids. We do understand that some of the players from last time have already backed out, and Tata Steel and JSW Steel are seen as the top contenders for the acquisition of majority stake in Monnet Ispat, which, as you said, is currently under insolvency proceedings. In the last round, expressions of interest were given by various parties, including Tata, JSW, Vedanta, Sham Group, even Edelweiss, ARC, Blackstone, TPG. But this time around, there will be fewer bids. Even the promoters were keen to put in their bids last time around. But because of the ordinance and the whole extension that has come about, it's unlikely that promoters will be able to submit a bid this time around. We will find out the results of this by the end of today, is when the deadline ends. There's a debt of 10,300 crore rupees that we're talking about, and the resolution of this case will be the first among the 12 IBC cases that were identified, that have reached the stage of firm bids even.
All right, Ritu, thanks a lot for that. Hang in there, because if you take a look at Monnet Ispat, the street doesn't like the fact that there would be lower bids and the possibility of it getting closed out, because the intraday chart, the stock of Monnet Ispat itself should come up for you, was about 8% when we broke the story, and now has come off, in fact, just a bit of a flare, and then it has declined to the flat line. Ritu, but you were speaking about the suitors for Monnet Ispat. What about the suitors for the SBI managing director? That's heated up?
Well, much easier race, I'd say. There are 10 deputy managing directors that are interviewing for the post of SBI MD come tomorrow, in New Delhi. Remember, after Rajneesh Kumar was promoted to be the chairman of SBI, one MD post of the 4 MDs has been empty. So these interviews are now being conducted to fill up that post. Some of the top contenders are actually, the CFO currently, Anshula Kant, is seen as a strong contender. SBI Life CEO Arijit Basu is also one of the people who've been called in for the interview. There are other DMDs, including Mrityunjay Mahapatra, Prashant Kumar, Pakirisamy, Karnam Shekhar. I mean, the list is on your screens, I guess. You'll see it soon. So all of these 10 DMDs are interviewing for the post. What is interesting is this new SBI MD who is named will likely be given charge of the stressed asset resolution group. Remember, this is the new strategy under the chairman, Rajneesh Kumar, that he announced the last time in the results as well, that they will be, once they fill up this new MD post, they will give the stressed asset resolution group in charge to be notified as the new MD, because that is one area where they wanted a separate MD post to be created for special focus on that area. So it'll be interesting to see which of these really make it to that position.
Okay, all right. So those are two keenly awaited outcomes, both Monnet Ispat and who becomes the next SBI MD. Thank you, Ritu, so much for getting us both of those stories. We have to take a quick break on that note. We'll come back with some interesting conversations on the other side. NANDAN Denim will be one of the stocks in focus today. The company came out with what looked like a pretty steady set of numbers for the second quarter. We'll get chatting with Ashok Bothra, CFO of NANDAN Denims.
The market's flirting around at the low point of today's trading session, 10,275 thereabouts, where the Nifty is, but a lot of stocks, the index heavyweights, are dragging it lower. Two stocks in particular which are on my radar right now are from the telecom space. Bharti Airtel should come up for you. That one's at the low point of the day, not much in terms of weight on the index, but has incrementally gone to the low point of today's trading session. Bharti Infratel too, in fact, it's down in today's trading session at the low point of the day. And if you just take a look at what the stock has done over the last few trading sessions, last few months, 6 months, it's corrected about 25% from its 52-week high. And another couple of stocks that are losing as we speak, PFC is at the low point of the day. And let's pull up REC as well. Usually these stocks move in tandem. REC is at the low point of the day. But one stock on our radar right now is NANDAN Denim. It's in focus on the back of a steady second quarter number, as the revenues came in higher by about 37%. The net profit too came in as the company's capex kicked in. Mr. Bothra, the CFO of the company, joins in. Thanks a lot, Mr. Bothra, for joining in. You know, great as far as the revenues and the net profit growth is concerned as well. But one concern, it has come in on the back of some new capex. You've had a lot of triggers for you. You've integrated the plant backward. You've also added some shirting capacity. None of those scale benefits really reflecting on the margins. Over the last 6 years, your margins have been around that 14-15% mark. What are the triggers for your margins to go ahead, and can we expect them to improve?
So if you see the moment our expansion was over, so we were we faced the impact of demonetization and GST. Despite that, this type of headwinds, our results as compared to other industry players are seems to be better off. So it is not so key post expansion our growth is not there in terms of profitability, and so otherwise profit would have been lower.
But sir, just to take that point forward, we're just trying to understand the margin profile and what the the next sort of levers could be. Let's start by understanding what has happened with your backward integration, because you did that on the spinning side. But typically, when that happens, margins should improve. Will we see that maybe in Q3, Q4?
In Q3 and Q4, there may be some pressure on the pricing. Looking at the present trend, so we are looking better market post March only.
You said pressure on pricing. What have the average realizations been for you in Q2, and how much pressure are you expecting now in 3 and 4?
In Q3, if you see, this is a Diwali month, basically in October. So post Diwali, there is some slackness as far as demand is concerned, and because of the GST also, there is some impact on the demand also in the short term, very short term. And since textile policy, Gujarat state textile policy was nearing to its end, basically in the month of September 2017, which got extended for another 1 year. So there is little advancement by other industry players, as far as capacity expansion is concerned. So, but these are very, short-term phenomena, and we are looking, for bright future for denim industry.
Sir, can you give some numbers? That would be really helpful. Where was your average realization per meter in Q2? And when you're talking about this post-Diwali flatness come in, how should we sort of expect that number to change towards the end of the year?
And Q2 is around 131 rupee per meter as far as denim is concerned.
Okay.
Which is again at the same level of 130 of Q2 of year-on-year basis, FY17. And shirting relation has gone from 108 to 113 per meter. But this is very subjective because license consists of product mix also. So if you are some particular sort is there which is having less cost also. Say if the combination of grass having is more, then your relation may come down also, but at the same time, their cost will also come down.
Right. Mr. Bothra, as you speak, the stock is at the low point of the day. The street really is worried about the next leg of the growth for the company. You spoke about a lot of these external tensions. You spoke about GST. You spoke about the industry not doing well. You spoke about the textile policy of Gujarat as well. But your own growth over the last many years has come in via capex only. 572 crores in FY12 has turned into 1220 crores. 12 has turned into 1220 crores in FY17. Your capacity has increased a lot. The next leg of growth for the company, will it come from value addition or will it come from more capacity addition? How are you positioned to benefit from that?
So growth will come from the volume also, and as far as from value addition also. So both are the trigger points for scaling the new heights basically. So in the medium or near term, we are not looking any major issue or hurdle for achieving this.
So
this is very very temporary phenomena.
I understand, Mr. Bothra, that it is a temporary phenomena, but if we take a look at the margins, that is not temporary from FY12 to FY17. In fact, that graphic should come up for you. The margins are just between that 14%, 16%. Where do we see the margins going forward in the midterm? Can we see 18%, 20%, 22%, 23%? The value-added products, will they contribute to your margins?
They will definitely contribute to the margin also, but if you compare our result with the other industry players. So our results are better off.
Okay. So, sir, just leave us with a guidance then. FY18 year end, what should the EBITDA margin be? And FY19, what sort of margin range are you targeting?
So it should improve, ma'am. I cannot, quantify the margin, basically how much EBITDA we are going to earn, but definitely it will be better off than the existing margin.
All right, Mr. Bothra, thanks a lot for those comments. It should be better off. That's the comment coming in from Mr. Bothra, but not really clarifying exactly where the next leg of growth would come from, whether it be volume or margins. And if at all they are margins, will they go above the average range? The stock at the low point of the day, what we'll do is slip into a short break, come back, we'll speak about Century Plyboards. That one is buzzing in trade. Edelweiss has initiated coverage on the stock. We'll get chatting with Keshav Bhajanka.
So market's still struggling a little bit, just about 40 points lower. That the one company that we now have on our radar is Century Ply. Now, we had Edelweiss initiating coverage, and they seem to have fairly optimistic expectations from Century Ply. We have the management with us, so let's take a look at what they have to say about their prospects going forward. Keshav Bhajanka, ED of Century Ply, is now with us. Keshav, great to have you on the line today. So, I just want to start off with the volume growth, because as we were just chatting in the break, you told us that first half volumes are about 8% on the plywood side. Is second half looking even better?
8% is on the blended side. That includes plywood, laminates, and the rest of the products.
Okay.
Second half of the year will definitely be better. In the second half of the year, we have MDF which comes into play. Our MDF capacity is at the moment the largest in India, and we are expecting to ramp up to close to 70% plus utilization within Q4.
You said your MDF capacity is the largest in India as of now, but day before yesterday we spoke to Greenply as well, Keshav, and they have brought forward their commissioning of their MDF plant. Do you foresee some sort of competition coming in from that, because theirs post-expansion will be the largest as well?
You see, what happens in MDF is it is not a very, very high-priced product per kg, so the transportation cost becomes very important. Greenply's next plant is coming up in South India,
right,
and we are based out of North India. Now, the transportation cost between the South and North will be close to 12%. So, when you look at a product that has net margins, I'm not talking about EBITDA, I'm talking about net margins of close to 12%, that transportation cost really plays against a plant that is located outside the region. So, I think, yes, it will definitely bring competition, but at the same time, us being located in the North, I think we have an advantage of a geographical benefit.
All right. So, if you could tell us, what kind of revenue growth can you expect in FY18 itself? We have one half of the MDF plant. How much would that mean in terms of incremental revenue? And earlier you had guided for what, 15 to 20% growth as far as the revenue growth is concerned in FY18. First half you've done just 5%.
In the second half, we're going to be looking at a higher revenue growth. Of course, plywood has seen an increase after a reduction in GST from 28 to 18%,
right,
effective on the 15th of this month. In laminates, we've been doing a good growth in the first half, and the second half, our growth keeps on improving. Overall, I think MDF should add about 140 to 150 crores to our top line. So I think we can look at a 15% plus growth definitely for this year, and going forward, it is going to increase.
Okay, so 15% for FY18 and probably better in FY19.
15% plus.
15% plus, okay. You are also entering floor tiles, decorative veneers. Is that something that's already happened? As in, what's the anticipation from that business?
We are one of the earliest players in decorative veneers, so we've been present in this category for over a decade now. As far as flooring is concerned, we are still considering the project. And flooring, it depends on the profitability of the entire segment. But yes, it is something that is under consideration, and going forward, we might be looking to enter that market. So,
floor tiles, is there some sort of capex that you have in mind for that? And can we see a move on it actually in FY19, if not this year?
Yes, definitely. If we proceed, it will be in FY19. The capex is going to be very limited because it's not a very high capex business. I think it's going to be less than 20 crores in total. And this is actually laminated flooring. So it is not exactly floor tiles. Laminated flooring is a product that is made out of HDF, which is a product that is made alongside MDF. So this is just a further vertical integration where we're moving forward in the value proposition.
All right, before we let you go, Keshav, the street likes what you are saying. The stock, which has already doubled from the start of this year, is currently at the high point of the day. So let's get in one quick word as far as your long-term prospects are concerned. Edelweiss, which initiated coverage on your stock today, believes that you can do 3,400 crore revenue by FY20, 600 crore EBITDA by FY20, and 400 crore net profit by FY20. That compares with 200 that you do right now, the net profit. Do you think that is a possibility?
I think we're going to try to beat that, to be honest.
Okay, then you're going to try to beat that. That's the commentary coming in from a rather optimistic Keshav Bhajanka, and the street likes that. The stock is up 4% as we speak.
4% in a weak market.
One stock that, I was watching out for while we were talking about Century Plyboards, take a look at Havells. That wire seems to have suddenly caught some massive fire. Is at the high point of the day. Havells from the mid-cap space should come for you. The building product space itself is actually buzzing around. So take a look at Havells. And then you have Oil India too. All these quasi oil plays. Oil India is at the high point of the day despite crude oil prices being higher. I'm not too sure exactly what the correlation out there is.
Upstream, so sentiment upstream benefits. I mean, if you want to play the price of oil, so maybe that's something that's working well for Oil India. Infosys is trying to put up a fight, but it's not really very successful because on the large cap side of the market, there is still that 45-point decline on the Nifty, though that's one stock that's trying to negate it. Let's do one thing. We will take a quick break on that note. We will come back and, of course, keep getting you more on the markets. We have Trading Hour coming up next.